Hello everyone. So yesterday we got a new CPI print. US inflation rate year over year is down to 3%, which is basically the high range of the previous decade. So that's pretty good news, I suppose. We could see normal CPI go lower, but there's still a problem with the core inflation, which excludes food and energy, and the core CPI is still sticky at 4.8% year over year. So I don't see the Fed cutting rates unless core CPI comes down to this 2.5-2% range, or uh, they could cut rates if a recession comes maybe by the end of the year or next year. Now we can see that the core CPI, the core inflation is still high when we compare it to the normal inflation rate, so it's still quite a significant gap. But I think the trajectory is right so far. So if we go to the CME Fed Watch tool, we can see that in the next meeting of 26th of July, there's a 92% probability that the Fed will increase the interest rates, which would be a very rare occasion because last month they did a pause, and usually when they pause, they don't raise interest rates again. So we'll see. We'll see what will happen, but the probability, if nothing else like terrible in the markets happen, the probability is quite high that they will raise 25 basis points. And yeah, the market believes that for the next by December the interest rates will remain at between 5.25 and 550. Should probably zoom in a bit so you can see this better. So these are the highest probabilities, and then the Fed should cut interest rates, or the market expects interest rate cuts, and this will probably be because something bad happens in the market, because usually that's why the Fed cuts interest rates. Now let's see how the markets reacted. We can see gold over here. This is a monthly chart. On the day, gold and silver went up on the lower inflation, probably because investors are expecting interest rate cuts. Right now, I'm expecting gold and silver to actually go down because we have positive real rates. So if gold and silver should go up when positive real rates are negative, then if real rates are positive, why should we not expect gold and silver to go down? And we can also, I mean, not in the short term, but in the medium term, like over the next 6 to 12 months, it's a possibility. We can also look at total assets, and as you can see, there is a bit of quantitative easing. We are taking down the lows from the banking crisis in the spring and March. So yeah, if the Fed is contracting the balance sheet, in theory, we should see the markets contracting from now on. But for now, of course, the S&P, the Nasdaq 100, the composite, they are all in a pretty strong bull market. Oil is up a bit in the last few weeks. Uh, there are news that OPEC is continuing to cut production, probably to sustain these high levels. They're making good profits, I would suspect. But if oil comes down, then maybe the core inflation will also go back down, and that would be better for the average person as long as they, you know, manage their finances properly. Speculative. Let's look at the dollar a bit. The dollar tanked for some reason. I mean, it's down. The dollar index is down 2% over the last week. So it's below the previous support. So right now it could probably go down to like 95 over the next few months, and that could make gold and silver prices go higher if nothing bad happens in the markets. Because usually, if a crisis comes, gold and silver will also tank, but that's on the spot, and you will probably not be able to buy gold and silver coins at discounted prices. Probably everyone is gonna rush to buy gold and silver coins or bars like physical bullion, and premiums will go higher. That's what happened back in March of 2020. Speculative assets like Bitcoin are quite flat in the last 3 weeks. They didn't really respond negative or positive to the inflation print so far, but we will see what will happen over the next week. So that's my short market brief regarding inflation, and I'll see you in the next video. Have a good one.